While physical silver and gold offer substantial upside, Oliver specifically highlights that junior mining companies present what he calls the greatest opportunity, using the word especially to emphasize where he sees the most dramatic returns. Consider the profit leverage mathematics. A mining company producing silver at a cost of $20 per ounce, selling into a $77 market, makes $57 profit per ounce. If silver rises to $300, that same miner now makes $280 per ounce. Profits haven't tripled. They've increased roughly 5 times. Mining company stock prices typically move 3 to 5 times the underlying profit expansion. A 5-fold profit increase could drive share prices 15 to 25 times higher. In reality, during mania phases, the multiple expansion can be even more extreme. This leverage effect has been demonstrated repeatedly in commodity bull markets. During the uranium boom of the early 2000s, uranium prices rose 7-fold. The best positioned junior uranium mining stocks rose 50-fold or more. In the lithium explosion that peaked in 2022, lithium prices increased 13 times. The best junior lithium miners saw gains exceeding 100 times their base valuations. Oliver's emphasis on junior miners isn't casual commentary. It is a deliberate signal about where he believes the most explosive returns will occur during this silver cycle. However, selectivity is absolutely crucial. Mining companies vary enormously in quality. Some have hedged their production, capping upside. Some operate in politically unstable jurisdictions, where nationalization risk is real. Some have incompetent management teams that will squander the opportunity even in a bull market. The opportunities lie with unhedged producers operating in stable countries like Canada, the United States, and Australia, with competent management teams, strong balance sheets, and quality assets in districts with expansion potential. These represent high-risk, high-reward investments suitable only for the aggressive portion of a portfolio. But for investors who can tolerate extreme volatility and have conviction in the underlying thesis, the potential returns are extraordinary. Before anyone rushes into silver investments based on Oliver's forecast, there's a critical reality that must be understood and accepted. This market will be violently volatile. Rick Rule, a legendary resource investor with over 5 decades of experience, offers sobering historical perspective. During the 1970s gold bull market, even as prices ultimately climbed from $35 to $850, there was a 50% correction in the middle of the advance. Imagine experiencing that. You're positioned in what turns out to be a historic bull market. Prices have already doubled. And suddenly, you're watching half your gains evaporate over several months. The investors who panicked and sold during that correction missed the subsequent move from around $125 to $850. They missed a nearly 7-fold gain over the following 6 years. Rule states with absolute certainty that silver will experience at minimum a 25 to 30% correction at some point during this bull market. Not might experience, will experience. These corrections serve a purpose in bull markets. They shake out weak hands and speculators who lack conviction. They create opportunities for strong hands to accumulate at better prices. They reset sentiment, so the next leg higher doesn't start from a position of universal optimism. The recent correction demonstrated this pattern perfectly. Silver fell 18% from its peak. Panic selling emerged, and within 10 trading sessions, the entire decline had been erased. Those who sold in fear locked in losses. Those who held or bought the dip were rewarded. Is silver the next big thing in the investment world? Many of you have been asking about it, and today we are diving deep into some fascinating research that suggests a major move could be on the horizon. We're going to explore the work of Michael Oliver from Momentum Structural Analysis, who's been tracking some very interesting patterns in the silver market. So if you're curious about precious metals or looking for the next potential opportunity, you're in the right place. Now let's get straight to it. Michael Oliver isn't your typical market analyst who just looks at price charts. He focuses on momentum. Think of it like this. Price tells you where an asset has been, but momentum can tell you where it's going. It's about the energy and force behind a price move. For years, Oliver has been pointing out a massive multi-year base structure that silver has been building. Imagine a coiled spring, getting tighter and tighter, just waiting to be released. That's the picture he paints for silver. So what's the big deal with this base? Well, according to Oliver's analysis, silver has been trading in a relatively defined range for a long time. It's been consolidating, building up strength. He identified a key breakout level, a line in the sand that, once crossed with conviction, could signal the start of a massive new uptrend. For a while now, silver has been flirting with this level, testing it, poking its head above it, but not quite making that decisive, sustained break. The fascinating part of Oliver's work is how he compares silver to other assets, especially gold. He uses what he calls a momentum ratio to compare the two. This isn't just about the gold to silver price ratio you might hear about. This is about comparing their underlying momentum, their internal strength. And for a long time, gold's momentum was leading the charge. But recently, Oliver's charts have shown a significant shift. Silver's momentum has started to outperform gold's. This is a critical signal. It suggests that the leadership within the precious metals complex could be rotating from gold to silver. Why is this rotation so important? Historically, when silver takes the lead, it tends to move much more explosively than gold. It's the more volatile, more speculative of the two. So when it finally breaks out of a long-term pattern and starts outperforming gold on a momentum basis, the moves can be dramatic. Oliver has highlighted similar patterns from past bull markets where Silver-S outperformance signaled a much broader and more powerful rally for the entire precious metal sector. Let's look at the bigger picture for a moment. What are the fundamental drivers that could support such a move? We're living in a time of incredible monetary expansion and persistent inflation concerns. Central banks around the world have been printing money at unprecedented rates. This devalues fiat currencies and makes tangible assets, like silver, more attractive. Silver isn't just a monetary metal, it's also a critical industrial metal. It's used in solar panels, electric vehicles, and countless electronic devices. This dual demand, investment and industrial, creates a very compelling backdrop. As the world pushes towards green energy and further electrification, the industrial demand for silver is set to grow significantly. So you have this fundamental story of increasing demand and a potentially constrained supply, and then you have Michael Oliver's technical momentum work lining up perfectly with it. He points to specific momentum trigger levels. For example, he might say that if silver closes above a certain number on its annual momentum chart for a specific period, it confirms the breakout. This isn't just a guess, it's a disciplined, rules-based approach that removes a lot of the emotion from market analysis. It's about waiting for the market to prove itself. When Oliver's momentum indicators for silver finally trip their long-term buy signals, he suggests the character of the market will change completely. The slow, grinding action we've seen for years could be replaced by a fast, powerful upward trend. He describes it as a rip-your-face-off rally. This is when the institutional money, which has largely been on the sidelines, will be forced to chase the price higher. They can't ignore a major asset class that is clearly in a new bull market. This is what creates those parabolic moves that can generate life-changing returns for early investors. Now, of course, no investment is without risk, and analysis is not a guarantee. The market can be unpredictable. But what Oliver's work provides is a roadmap. It gives you key levels to watch and a framework for understanding the market's internal dynamics. It's about probabilities, not certainties. The thesis is that silver has completed its long-term correction and basing process. It has weathered the storm, shaken out the weak hands, and is now ready for its next major leg up. The recent action, where silver has pushed up and held its gains, is seen as very constructive. It's behaving exactly as it should if a major breakout is imminent. Think about the psychology of the market. For years, investors have been frustrated with silver. It's been called poor man's gold and has underperformed many other assets. This kind of negative sentiment is often what you see at the bottom of a major cycle, right before a significant turn. When everyone has given up hope, that's often the best time to get interested. The fact that silver is now starting to show signs of life, confirmed by the objective momentum data from analysts like Michael Oliver, should make every serious investor pay very close attention. So, to recap the key points from Oliver's perspective, first, silver has built a massive multi-year momentum base, like a coiled spring. Second, it's starting to outperform gold on a momentum basis, a classic signal that often precedes a major rally. And third, once specific long-term momentum levels are decisively broken, it could trigger a rapid and powerful move to the upside, attracting a flood of new investment capital. This is a story that has been building for years, and it looks like we could be at a major inflection point. Keep an eye on those key levels. Watch how silver behaves relative to gold, and consider the powerful fundamental tailwinds of inflation and industrial demand. The evidence is mounting that something big is brewing in the silver market. It could be one of the most exciting investment stories of the coming years. Thank you so much for watching. I hope this breakdown of Michael Oliver's work on silver was helpful and gave you some food for thought. If you enjoyed this analysis, please hit that like button and subscribe to the channel for more deep dives into the markets. I'd love to hear your thoughts on silver in the comments below. See you in the next video.